Hello and good morning on this beautiful Thursday, March 3rd, 2022. How are you, my friend?
Doing very well. Doing very well. Good morning. How are you?
I'm doing very well. Happy to be on the Go No Go show here for StockCharts TV with my good friend Alex Cole, creator of the Go No Go charts. And for everybody who's watching this, if you're on YouTube, that's great. But also check out the StockCharts TV on demand application. So you can check out this show every Thursday afternoon, which airs at 3:30 p.m. So hopefully, unlike last week, we're going to see the markets maybe a little consistent between this morning and this afternoon. But Alex, let's dive into the charts, starting from the top down. Let's just look across the asset classes to see what's in trend.
Yeah, so on a pure go-no-go trend basis, we're looking at an asset map of the major asset classes. We've got the equities represented by the S&P in the top panel. We've got treasury bond prices. Then we've got commodities, the dollar, and Bitcoin. And what we are seeing, as we've seen for a couple of weeks, is that equity still maintains its no-go. We've had some massive swings again this week, as seems to be normal at the moment, but still in a no-go. Treasury bond prices also still in a no-go. Commodities, as we've been talking really since the beginning of the year, is where the trends have been. Oil, gold, mining companies we'll see that's where the trends have been. And the dollar has come back strongly based on what's happening around the world, I'm sure. And then creeping in the bottom panel, we can see that Bitcoin has actually returned to the paler aqua go bars. So we'll watch out for Bitcoin there and see if that go trend can persist.
Absolutely. Strong US dollar, strong commodities. We've got inflation running rampant, and we're going to check back in on those cryptos here at the end of today's show. But let's talk about what's on everybody's mind. Let's pull up a chart of the S&P 500. And over the weekend, when we were writing our piece for institutional subscribers, really every analyst on Wall Street was discussing whether this was going to be the tweezer bottom, right? The end of week rally last week, Thursday, and follow through on Friday. Had everybody questioning whether this was a reflexive rebound within a long-term downtrend, or whether this was the start of the re-emerging rally, and we all needed to pile into this buy the dip moment. I think the thing that sticks out to Alex and I is that speculate all you want. We want to follow trends once they are clear, right? So buying in at an absolute bottom, catching falling knives, to use the old joke, is just really not, certainly hasn't worked for us. And as trend following investors, we know that you're looking for some confirmation from the weight of the evidence. And this week has just been further aggravation to a lot of investors in the S&P who've seen that index continue to chop around. It doesn't seem like we're out of the woods yet. We need to see something a lot more constructive than what's happened so far this week. But the speculation is also that at sentiment extremes, you can see a great contrarian signal. So everybody was talking about the head and shoulders top on this chart. Everybody was expecting things to go lower. The AAII sentiment readings were as bearish as they had been in years. And what we've known from contrarian investors like Bob Farrell, even Sam Stovall had said, when there's nobody left to sell, it just can't go down much further. So that extreme bearishness, extreme pessimism could have looked like a washout. But Alex, what do you see from a go-no-go trend perspective, the composite blend of all those technical indicators? What's it telling you about the S&P 500?
I think it's important to just remember that we aren't in the business of forecasting what's going to happen. We say it all the time, but true technicians are reacting to what the market is really telling us categorically. And hopefully you can then make some decisions that play out well enough for you going forward. But so the point I'm making is that right now we don't know what's going to happen next. We don't know if this was an ultimate low and we're going to reverse into a go trend and take out prior highs. We don't know if this is going to set another lower high and roll over and the no-go will continue further down. But what we do know from the weight of the evidence is that this no-go trend is in place. We are seeing the weight of the evidence suggest that there's more bearish inputs or bearish criteria being hit than bullish ones. We're seeing the no-go colors remain in place. And what we're seeing is prices lower than these prices up here where we hit that resistance that we were all talking about around 45.50. And if you look to the lower panel, this is another important inflection point. The GoNoGo Oscillator has risen to test the zero line while in a no-go trend. So we're watching to see now if this becomes resistance again and the oscillator gets turned away, most likely this will be another lower high and we'll see price move lower and perhaps even mount an attack on this low that we saw last week. So right now, still in a no-go. Yes, we've seen a strong rally this week, but still far away from getting above prior swing highs, and the oscillator still at the zero line. So we're going to watch to see what happens next, and then we can position ourselves accordingly.
And of course, Alex and I aren't here to tell you what time frame to trade. We're looking at a daily chart right now, and maybe your expertise is in those intraday, really short 5-15 minute charts. In which case, you've probably caught large moves in both directions, playing to the long and short side. But when we're talking about the top-down analysis, when we're talking about what every Wall Street analyst is looking at, to try to identify the bottom first. We don't want to be the ones to identify the bottom first, but we do want to capture the meat of the move. We want to trade with the trends. And frankly, the last couple of months of frustration we've been writing about, and you've seen on this show, there's a lot of alternatives to just holding U.S. equity indices. So, Alex, let's move on from the S&P 500, and let's quickly pull up the sector relative strength heat map, the GoNoGo rel map. And so if we can get under the hood of the index and start to look at what's working, not just on an absolute basis, but on a relative basis. So the ratios of each sector ETF against the benchmark index, that's what we're seeing in all of those colorful panels, telling us what is trending as an outperformer and what is underperforming. So let's walk through those 11, Alex.
Yeah, so the story remains the same in most of these cases. We're seeing underperformance from the sort of growth, that what you typically consider growth sectors, technology, discretionary communications, technology of note, showing amber goldfish bars the last couple of weeks. We have seen some strength in some of the technology stocks. And then the outperformance coming again from the middle to lower half of this chart, which is that defensive play or that value play, the cyclical sectors such as energy, industrials, and then the defensive sectors like staples, healthcare, and utilities all in go trends. Now, there is some change happening, which we want to point out. Like we talked about technology. Well, financials have gone through a couple of amber bars and now painting a no-go bar at the end. And the same for materials here, gone through a series of amber bars. They've been struggling actually in and out of trend for a few weeks. So most things, we're still seeing clear leadership from some of these value sectors and underperformance from some of the discretionary sectors, but a little bit of change there in the middle.
Absolutely. And I can promise you that I know less than nothing about the international connectedness of Swift banking systems, or why it is that investors might be leaving financials, which are purportedly supposed to do really well in a rising rate environment. Yeah. What we know right now is that they are entering no-go in strong conditions as investors are piling out of financials. We want to trade with those trends and get out as quickly as we can identify when those trends have ended. Speaking of trends that just will not end, Alex, let's turn our eye to the oil markets. I filled up the other day. It's not a pleasant feeling at the pump, but as investors, we want to capture those trends and understand that the inflation, the geopolitical tensions, the invasion of Ukraine by Russia, the sanctions that have come from NATO and allies, all of these things are going to affect the price of oil. But if we just pull up a chart of WTIC, it's going to be the continuous contract for light crude. We're seeing exceptionally high prices per barrel, and that's playing out throughout the energy space as we saw the XLE sector outperforming again, continuing to really lead this market higher, up 5% yesterday. The XLE sector. So, Alex, let's talk a little bit about oil. What are you seeing in this trend picture right now?
I mean, nothing to say that hasn't been said before. We've seen this since the beginning of the year. The go trend identified, strong move higher, several tests of zero, rallying off the zero line. The last test on this sideways movement created a bit of a go no-go squeeze which showed the reduced volatility here. But then as it was broken, we get a fresh trend continuation icon. And then the last couple of bars here have really been something to behold, some really big moves. We're back over $110 a barrel.
$110 a barrel. Correct me if I'm wrong. It was back in 2008 where crude was approaching $150 a barrel, and
January 2008. Yep,
Jan 2008. And as the great Robert Farrell told us all, the markets can stay irrational much longer than you can remain solvent. And so the idea of oil continuing higher is not out of the question. But we want to trade with that trend. Continuing on this idea about the invasion inflation relationship, and a lot of ink has been spilled by analysts, and a lot of financial news anchors have been talking about the impacts of the geopolitical tensions, Russia's invasion of Ukraine. But I think it helps to understand just where the linkages are, where we are dependent. Everybody knows Europe is getting most of its natural gas from Russia, but they're also a huge producer of wheat. Agricultural commodities coming out of both Russia and Ukraine make up for about 25% of the global dependence on wheat. So let's just pull up a futures chart, WHEAT. Should give us a look at what wheat prices have been doing so far this week. Again, this went out on Monday, talking to our subscribers of GoNoGo Research, just about what trends we are looking at. Obviously, the inflation narrative is playing out in a lot of these commodities, and we're going to talk about mining and minerals here in just a second. But Alex, talk to us about what you're seeing in this parabolic move.
Yeah, it's obviously, again, we didn't know this was going to happen, right? You don't know that Russia's going to invade Ukraine, but we did see the chart do what you'd hope it would do. So, you can even compare to, like, it doesn't play out every time, right? And I think it's important to note that technical analysis gives you a intelligent, hopefully, framework within which to invest. And that doesn't mean that there are never trends that don't materialize or that don't work out in your favor. But the good thing about having a disciplined process, as we're always trying to teach people, is that you get told when you're wrong as well as when you're right. So back here, there was some identification of bullish criteria making a go trend appear, but then it reversed quickly and told us that actually, no, we're going back into a no-go fairly quickly. So, that's what we're always talking about, small losses, right? Not holding on what if this had rolled over and kept going? We thought it was a go, it turned around that it wasn't a go. This time, though, with the oscillator being above zero and holding the zero line this entire time that the no-go tried to take hold, and then breaking out of the squeeze to identify another go, already that's slightly more bullish because you've been above the zero line finding support. And then we see the go identified, and then we get that follow through from momentum, that trend continuation icon, green circle, telling us that, yes, the trend is in place. Now it's strong blue bars, and momentum has returned in the direction of the trend. And that really then we saw it set fire, or catch fire, I should say, and we've been off higher ever since.
That discipline that is required to run a portfolio or to trade successfully. We are talking about things that are simple to say and really hard to execute. But buying back into wheat, capturing that go trend in mid-January, and then quickly exiting, that's tough to execute. Which is why GoNoGo charts are designed to remove a lot of the analysis paralysis. If you had a dozen different indicators on this chart, you could probably convince yourself that, if it's a high conviction trade, you believe agricultural commodities are going up, you want this wheat to work out in your favor. Again, we can't forecast what is to come, but when you put enough lines on the chart, you can convince yourself of just about anything. The simplicity and the elegance of seeing all of that technical analysis, all of that information, all of the signal in a simple color-coded chart makes it quite simple to simply follow your rules. And that's the name of the game. That's what we're all after, is being able to be disciplined traders and investors and follow those rules each time. Quick note on inflation. Today was the non-manufacturing number from the macroeconomic side. Looking at the service industry, underperforming, continuing through February, lower number again this last month, and headline inflation (PCE) up at all-time highs, 6.1%. I shouldn't say all-time; hasn't been this high since 1983. Which, for anybody younger than me, knows that that's the first time in their life that they've seen inflation this high. And so, on this inflation narrative, we're seeing more and more commodities continuing to really spike higher. But let's take a look at what's not spiking higher, Alex. If you wouldn't mind, pull up a chart of RTSI, the Russia index, and let's just see what a no-go looks like.
Yeah, it looks a lot like the chart of the currency.
Yes, the ruble is down through the floor, has the glide path of a brick, as Ralph would like to say. But again, it was already declining, already in a no-go trend, continued momentum resurgence to the downside as the GoNoGo Oscillator was rejected at the zero line over and over again through the fall. The invasion is just the latest, but imagine being able to trade this to the short side and using all these tools to your advantage. And Alex, anything that you would be looking for to see that the Russian index is perhaps bottoming? What would you need to see next on this chart?
Well, it's like you said earlier, trying to catch falling knives, as people used to say, is a dangerous game. But this could be the low. I mean, it was such an extreme move. This could be the low. However, this could be a dead cat bounce and a reactionary move higher. This bar right here. So we would turn our attention to the oscillator again. Now, number one, if this stays in no-go colors, then we're going to say that the weight of the evidence is still that the trend to the downside is in place. Again, we're not trying to catch the tops and bottoms of these moves. It's very, very difficult to do that. But we will assume the no-go is in place, and we will watch the oscillator as it rises towards the zero line here. If it can significantly break back above the zero line, we may well see color change as we go forward. But again, a little too early to say. We'll see what happens here now in the next couple of days with the price action, and we'll watch to see where the oscillator is.
And in a time of uncertainty like this, the world's looking for a reserve currency, stockpiling some cash in their portfolios, avoiding risk assets, and that has played out for a much stronger U.S. dollar. Let's pull up a chart of USD. Just to look at what we've seen in terms of dollar strength continuing this week. Fantastic.
Dollar had a really choppy run over the last few months, as we've been outlining in all of our research, really trying to figure out which way it's going. Lots of congestion, right? Lots of supply, and demand happening on this chart throughout this period. But we seem to be breaking above these highs. Really strong moves over the last 3 or 4 days. Strong blue bars, oscillator broken through the zero line, quickly tested it and found support. So, a strong looking chart on the right side for the dollar.
Absolutely. Now, we've known that strong US dollar can be a headwind for price moves in emerging market equity baskets. A few weeks ago, we were talking about the alternatives to investing just in the United States and several countries, including our friends to the north in Canada and more commodities-driven countries had begun to outperform the U.S. Really, most of the world and most emerging markets, ex-China, were really leading on a relative basis. Interestingly, this week, Alex, it was Australia, which had not been a part of the high performers, that really peaked out. And I think a lot of that is being driven by the metals and mining trade. But let's just pull up a chart of EWA. On a daily basis would be just fine, as it's striking a fresh go trend.
Yep. Higher lows, new go, oscillator seemingly finding support at the zero. We'll see. It's been very, very choppy, but we'll see.
We shall see. And switching back to the North American side, let's look at a chart of XME over SPY. And if we look at the ratio of metals and miners to the equity index, we're going to see some really strong relative strength.
Yeah, absolutely. This is almost a straight line. I mean, it's amazing to see the oscillator like that. you don't see that very often, right? With momentum just remaining overbought, but that proves, that's why we learned from the textbooks that the sell signal is not when it goes overbought, but when it goes back into neutral. And for the GoNoGo Oscillator, that's going back below 5. We look like we've been at 5 now for a couple of weeks, but really strong trend to the upside for the, on a relative basis, pure basis too, but on a relative basis for the metals and mining.
You have a great analogy when teaching about momentum, particularly in the preparatory classes for the CMT program, those CMT exams. You talk a lot about rally cars and racing, and thinking about the speed of acceleration, the rate of change as a parallel to momentum. This looks like the Formula One that, pedal to the metal, and it just keeps getting faster here as momentum remains in that overbought category.
Yep.
Yeah. Excellent, Alex.
Formula One season just about to start again. The rally season has just started, so
as a Brit, this must be your heyday. Loving the rally cars.
Yeah, we love our racing.
Let's stick with this mining and metals theme for just a little bit. If you could pull up a chart of URNM, uranium, just as a not to stoke the flames of worry here, but it looks like we've struck a fresh go trend here in March.
Yeah, I mean, this is another. You hesitate to say nice looking chart when there's real troubles around the world, but it is a fresh go trend, and the chart doing what you expect it to do, what you hope it would do when price movements are clear. We were in a no-go, making lower lows, lower highs, lower lows, lower highs. On this low, it wasn't lower, it was a higher low, and it coincides with the oscillator riding that zero line and the squeeze building. As it breaks out of the squeeze, we see a couple of amber go fish bars, and then now a fresh go being painted. So, you could quite realistically or reasonably set your stops just sort of in this gap area and expect price to challenge these highs and set a target, maybe up here by the prior highs of the last go trend. So a fairly sensible way to manage a trade here based on what's happening with price action.
Absolutely. And let's just drill in for a second. A couple of housekeeping items. In the GoNoGo Oscillator panel at the bottom, we've got a light green line as it's riding the zero line, indicating average or light volume. And then the grid of GoNoGo Squeeze continues to build to its max height as as volatility has contracted. So that bottoming pattern that's happening in this chart of uranium is really the tug of war between buyers and sellers. And what a great illustration that the pressure that builds up when there isn't directional control from either bears or bulls. You see that grid climb to its max height, and then the break, right? We're expecting perhaps strong moves in the direction of the break. And what had been negative momentum on GoNoGo Oscillator breaks to the upside, positive momentum on heavy volume. That line turns dark blue, and we see price transition quickly through the go fish amber colors into a go trend, and then from weak form to the strong as it goes from aqua to blue bars. Looking like a pretty striking breakout there, right, Alex?
Yeah. We'll see from here. We're getting we might get some short-term consolidation because that's quite a run over the last 3 or 4 days. But then, we'll look to see if we can set a higher low and then a higher high coming forward.
And while the service sector of the economy is really underperforming, we're getting more economic data out today, Thursday, March 3rd. The manufacturing side of the business seems to be using up natural resources as quickly as possible. The copper trade starting to play out. Let's take a look just at an equity expression of copper and look at Freeport-McMoRan. That's FCX. Huge mining operation in Arizona, one of the world's largest copper producers. And Alex, if you wouldn't mind, let's take a look at this on a weekly basis.
Absolutely.
We just wrapped up sort of a choppy February, and what was striking on this chart is that on a weekly basis, got a pretty clear breakout above a 10-month basing pattern. Yeah,
and over the period of that basing pattern, we've really seen that the most of that sideways action, and what we like to talk about a lot of the time with these patterns is we like to see things start to line up on the right side of the pattern, right? So as we corrected sideways, oscillator went below zero, may well have been taking profits or exiting positions. We get that attempt at a no-go, doesn't happen, back to the go. And then now, as this consolidation continues on the right side, oscillator above zero, finding support off the zero several times. And now we break out above that, like you said, above those prior highs on a weekly basis. And even on a, a daily basis, if this came, you were talking about this to me on Monday, and then it's been quite a week for Freeport-McMoRan. So
absolutely.
good. Yeah.
And as we wrap up today's GoNoGo Charts show for StockCharts TV, let's check in on the cryptocurrency markets, Alex. Interesting to see them sort of move away from correlation with the technology sectors, the growth equities and risk assets. We've seen Bitcoin sort of dabbling around, striking a little go, maybe back to a no-go. And I'm sure between the time that we record this and the time it airs, it'll be a couple $1,000 different per coin, but
it'll be 30 or 60 by the time.
It'll be 30 or 60. That's right.
Yeah.
What are you seeing on this chart, Alex?
It's trying. It's trying. We're seeing we're seeing a lot of the things that you'd like to see on a traditional technical perspective. A slightly higher low here, confirmed by a higher low in the oscillator. We're seeing that attempt to go back above into the go trend. It failed, and we've come back. We're at this level that is going to be difficult, because if you look at that line that's across the chart now, we've got all of that support on the left, and we've got all of that resistance then since the middle of the chart. So the go trend is in place, but it's going to be a struggle. What we'll watch for is if we can break above those levels right around sort of 45,000, then that'll be really interesting to those who are really excited for Bitcoin to go higher.
Absolutely. Alex, as always, a pleasure to look at these charts with you. Thank you all for watching GoNoGo every Thursday, 3:30 p.m. Eastern here on StockCharts TV. Or if you're watching on YouTube, make sure to subscribe, like, and share this with a friend. And we'll see you again next week. Take care.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.